Welcome to the Deep Dive, your shortcut to being well-informed. Today, we're really digging into Waaree Energies Ltd. Our mission here is to unpack their latest results, that's Q1 FY26, and also look at their big strategic moves, capacity expansion, diversification, and basically see where they're headed in this fast-moving renewables space. And just so you know, we're working from their official board meeting outcome, the press release, and their investor presentation, all dated July 28th, 2025. So pretty fresh stuff.
Yeah, and what's really interesting here, I think, is how this deep dive shows a major player adapting. It's not just about solar panels anymore. We're seeing how Waaree is strategically positioning itself for what comes next in energy. So you'll get some crucial insights into that mix of, financial health, sheer operational scale, and their, frankly, quite bold strategic thinking. Gives you the whole picture, really.
Okay, great. Let's kick things off with the financials then. Q1 FY26 ending June 30th, 2025. The headline numbers look pretty strong on the surface. Total revenue was 4,597.18 crores. Profit after tax, the PT, came in at 772.89 crores, and EBITDA reached all 1,168.67 crores. Solid numbers. But what's the story behind these figures? How do they really stack up?
Well, looking a bit deeper, the growth is even more striking, that PAT figure. It nearly doubled compared to last year, up 92.68%. And even from the previous quarter, it jumped almost 20%, 19.93% QOQ.
Wow, nearly doubled year on year.
Yeah, and EBITDA followed suit, up over 82% year-on-year and about 10% quarter-on-quarter. Their EBITDA margin was strong too, 25.42% for the quarter. Compare that to 18.3% in Q1 last year. Big improvement.
Okay.
And the ratios look good too. Return on equity, ROE, at 28.2%. Return on capital employed, ROCE, at 34.1%. But here's the really interesting bit, I think. A negative debt-to-equity ratio, minus 0.7x.
Negative. How does that work? Does that mean they have more cash than debt?
Exactly. Their cash and equivalents actually exceed their total debt. So they're in a net cash position. Think of it like, having more in your savings than you owe overall. It signals a really, really strong cash position. Quite unusual for a company growing this fast in such a capital-heavy industry. Speaks volumes about their financial management.
Right. That negative D to E is definitely a head turner. Shows a really solid foundation. Okay, so speaking of strength, let's pivot to operations. Their achievements and these big expansion plans, they hit their highest ever quarterly module production in Q1, right? 2.3 gigawatts. That's a 64% increase from Q1 last year, which was 1.4 gigawatt.
Yeah.
How significant is a jump like that? What's that tell us about their scaling ability?
Oh, it's huge. That 64% isn't just a number. It shows a serious ramp up in their manufacturing muscle. They're meeting demand. And it really sets the stage for what's next. I mean, they're already operating at a big scale, around 15 gigawatt for modules, 5.4 gigawatt for cells installed capacity.
Yeah.
And to build on that, the board just approved a major capital expenditure, CapEx. We're talking 2,754 crores. Yeah. And this money is specifically for setting up a new 4 GW cell plant in Gujarat, and another 4 GW plant, this one for ingot wafers, in Nagpur, Maharashtra. This spending is spread over the next couple of fiscal years, 26 and 27. And they plan to fund it through, a mix of internal cash and borrowing via their subsidiary, Sangam Solar One.
Smart mix.
And there's another strategic shift, too. They're planning to change the location for a previously announced 6 GW facility. Instead of Odisha, the plan now, pending shareholder approval, is Gujarat for the cell and module parts, and Maharashtra for the ingot wafer part, effective August 2nd.
Interesting. Moving pieces around.
Right. Plus, they've got other expansions moving along.
Yeah.
That 1.6 GW module plant in Texas, USA, on track, and another 3.2 GW in Chikli, Gujarat, also on track for commissioning.
Yeah.
It's also worth noting that as of June end, they still had over 2,800 crores left for their IPO.
Still unutilized.
Yeah, unutilized, just sitting in fixed deposits for now. So they have a very healthy war chest ready for all this expansion.
Okay, so it sounds like these plans aren't just about making more solar modules, are they? It feels like Waaree is looking at a much bigger picture, moving beyond just panels. What else are they getting into?
You absolutely hit it. This diversification is clearly fundamental to their strategy. They're pushing hard into new areas. For instance, green hydrogen. They've got a 300 milliW green hydrogen electrolyzer plant planned. And crucially, they've been awarded the PLI for it.
The production-linked incentive. That's significant, right?
Very significant. It's basically government backing that helps de-risk these big early-stage investments in new tech like green hydrogen, makes the economics much better. That facility should be running by FY27 with investment up to 2,073 crores.
Okay. What else?
Battery storage. They're targeting a 3.5 kWh battery energy storage system, or BES plant, also for FY27. Investment there is up to 130 crores, clearly seeing the need for storage. And inverters, too. A plant with capacity for 300,000 inverters a year, that's about 3 GW, expected by FY26, investment up to 551 crores.
So hydrogen, batteries, inverters, covering a lot of ground.
And one more, actually quite a clever move. They acquired 100% of a company called VoltShift Energy Transition Private Limited. Cost them just 1 lakh. It sounds tiny, right?
Yeah, what's the play there?
Well, VoltShift is currently non-operating, but the plan is to use it for their transformers business. It lets them set it up as a separate strategic business unit quickly, a nimble way to get into another key part of the energy chain. That should wrap up in FY25-26. Oh, and just a quick note, those talks to buy Enel Green Power India with the solar and wind assets, that didn't actually happen by the deadline, June 30th. So that specific deal is off the table for now.
Got it. So, wow, that's a truly diverse set of bets they're placing. Feels like they're trying to map out the whole future energy system. Okay, let's talk market dynamics then. What's the broader picture look like given all these moves? They have this huge order book, right? Around 25 GW, valued at nearly 49,000 crores, and a global pipeline over 100 gigabit. That's massive. But interestingly, most of the order book, almost 60%, is overseas, yet most of their revenue, 68%, is still domestic, from retail, EPC, enterprise. What does that mix tell you about how they're playing the global versus domestic game?
Yeah, it's an interesting balance. If we zoom out a bit, the overall industry environment is, well, mostly supportive, especially in their key markets. You look at India, they add about 10.6 gigawatt of solar just in Q1 FY26. Total capacity now over 116 gigawatt.
Huge growth.
In the U.S., also big growth, projected to hit maybe 500 gigawatt total by 2030. They added around 11 gigawatt in Q1 25 alone. And supportive policies are a massive, massive tailwind here.
Yep.
In India, you've got things like ALMM, the approved list of models and manufacturers. That basically pushes government projects towards domestic suppliers. And the PLI schemes we mentioned.
Yep.
Big incentives for local manufacturing.
Right. Creates strong home market.
Exactly. And in the U.S., those 35X tax credits under the Inflation Reduction Act, they're not small change. We're talking billions committed to boosting domestic renewable manufacturing. That really helps the economics for someone like Waaree building a plant there.
Okay, but are there headwinds, challenges they're facing?
Oh, definitely.
Yeah.
It's not all smooth sailing internationally. There's currently a 10% U.S. tariff on Indian solar exports. And there are ongoing anti-dumping investigations in the U.S. targeting India, Indonesia, and Laos.
Ah, okay. Trade friction.
Precisely. Which, makes their decision to build that factory in the U.S. look even smarter. It's a strategic hedge against some of these trade issues. But despite these challenges, management seems pretty confident. They're sticking to their FY26 EBITDA guidance that range of 5,500 to 6,000 crores, shows a real focus on costs and staying profitable.
Okay. Maintaining guidance despite headwinds.
Yeah. And just a couple of housekeeping points for investors. The trading window for Waaree shares opened back up on July 31st. And they also confirmed the reappointment of their key auditors, Vijay Talati for cost audit, Mahajan and Ibra for internal, and Makarand M. Joshi for secretarial audit. Standard procedure, really.
Right. So it's crystal clear Waaree Energies isn't just about solar modules anymore. They are really strategically positioning themselves right across that green energy value chain.
Exactly. And that leads to a bigger thought, doesn't it? You look at all this investment, the huge capital injections, the expansion across the whole solar chain from ingots right through to modules, and then this push into totally new green frontiers like hydrogen, batteries, inverters, even transformers. What does this really tell us about where companies like Waaree see the future? Is it just about making more energy? Or are we actually seeing the rise of these integrated energy ecosystem architects, companies aiming to control and optimize, well, pretty much every step? Generation, distribution, consumption. What does that imply for innovation, for market leadership down the road? How might this whole integrated approach reshape the energy world we know? Definitely something for you to think about.